Hi everyone, I'm Debbie Roberts, owner and financial advisor at Property Apprentice. Join us today for the Week in Review, where I talk about current events for the everyday investor and home buyer. Our topics for this week: topic number one from interest.co.nz on the 10th of October. Statistics New Zealand figures show household net worth dropped by $47 billion in the June quarter, while total income fell for the first time since this data series began in 2016. Topic number two from One News on the 9th of October. OCR cut reaction, brighter days ahead as rate release coming. Topic number three from interest.co.nz on the 8th of October. New Zealand Banking Association says despite tough economic conditions, the vast majority of New Zealanders are managing their financial situation well. Topic number four from TradeMe on the 8th of October. Spring trend or market rebound, house prices bounce back. Topic number five from interest.co.nz on the 10th of October. Rents are static around the country, suggesting supply and demand are reasonably balanced. Topic number one from interest.co.nz on the 10th of October. Statistics New Zealand figures show household net worth dropped by $47 billion in the June quarter, while total income fell for the first time since this data series began in 2016. The June 2024 quarter was challenging for households, as highlighted by Statistics New Zealand's latest data on household assets. The report showed a drop in household savings, a decline in net worth, and significantly, the first fall in total household income since the data series began in 2016. Household savings turned negative with a deficit of $479 million in the June quarter, a reversal from the previous quarter's surplus of $1.1 billion. This decline occurred as household spending rose 1% to $59.7 billion, driven primarily by spending on services and non-durable goods such as groceries. Meanwhile, household net disposable income fell by 0.9% to $59.2 billion, and total income decreased by 0.2%. Statistics New Zealand explained that net disposable income represents the funds households have available after accounting for income sources like wages and taxes. Westpac senior economist Satish Ranchod observed that household finances are still under significant pressure. Adjusting for population changes, he estimated that disposable income rose by 2.8% in the year to June, which lagged behind the 3.3% increase in consumer prices. Ranchod said slowing income growth, high interest rates, and rising living costs have squeezed purchasing power. However, he noted that inflation is easing, with expectations that it will fall below 3% soon, and the Reserve Bank of New Zealand's recent 50 basis point cut to the OCR may help households in the coming months. While Ranchod predicts a slow recovery in spending due to weakening labour markets and rising unemployment, he noted improved business and consumer confidence, albeit for the longer term, as opposed to the next 3 months, which data showed to be a little bit depressed. As borrowing costs decrease, gradual economic growth and spending may pick up later in the year. Statistics New Zealand also reported slower wage growth in the June quarter, with wages and salaries increasing by just 0.8% lower than the average of 2.1% from late 2021 to early 2024. Additionally, self-employed income and dividends both decreased during the quarter. Household net worth fell 2% or $47.1 billion to $2,311 billion in June, marking the first decline after 3 consecutive quarters of growth. Despite this quarterly decline, household net worth grew 1% over the year to June 2024. Household liabilities increased by 0.7%, driven by a 0.9% rise in housing loans, while consumer and student loans declined. Ratniaki explained that the fall in household assets reflected the drop in property values for both homeowners and landlords. Second topic for this week in review from One News on the 9th of October. OCR cut reaction, brighter days ahead as rate relief coming. The Reserve Bank's decision to cut the official cash rate, the OCR, by 50 basis points has been welcomed as a relief. The bank based its decision on inflation moving within the 1 to 3% target range and approaching the 2% midpoint, which was their target point. In response, major banks quickly reduced their interest rates. The Reserve Bank's Monetary Policy Committee acknowledged short-term risks, citing uncertainties in the Middle East, US, and China. It also noted that future OCR adjustments could happen at a faster or slower pace than anticipated. That's not much guidance there. CoreLogic economist Kelvin Davidson commented that the OCR is on a steady downward trajectory, indicating the bank's intent to quickly return monetary policy to a neutral or even stimulatory setting. He predicted falling mortgage rates could temporarily boost confidence and activity in the housing market, but doubted a major increase in house prices due to job losses and slower wage growth. Retailers are optimistic about the OCR cut. Retail New Zealand chief Carolyn Young said that the timing just before the busy holiday season is ideal for boosting sales, which are critical for hitting annual targets. She also hopes that the cut will restore consumer confidence. Murrig Chapman, co-founder of Money Sweet Spot, praised the Reserve Bank for not being overly conservative, noting that lower rates provide relief from the rising cost of living and high mortgage rates. He advised caution, urging Kiwis to save extra money rather than overspend during the holiday season. Finance Minister Nicola Willis called the rate cut welcome news for families and forecasted brighter days ahead. She emphasised that lower interest rates would relieve households and businesses, boosting both investment and innovation, signalling the end of tough economic times. My thoughts on this are that interest rates and savings accounts are also reducing. And there is always a downside to good news like this, but certainly anyone who's got a mortgage that's coming off a fixed rate in the short term is going to be pretty excited about the fact that interest rates are starting to move downward. If you'd like to learn more about investing in property, join me at one of our free events called How to Succeed with Property Investing. I'll discuss strategies for successful investing from my perspective as an experienced investor and a financial advisor, and these events are all available live, online, or in person. Check out propertyapprentice.co.nz for upcoming dates and register today. We don't sell property, so it's all about increasing your knowledge to reduce your risk. If you've already been to one of our free events and you'd like to find out more about how we can help you to reach your financial goals, you can also book a no-obligation phone call or meeting with my husband, Paul Roberts, via the website. That's propertyapprentice.co.nz. Topic number 3 from interest.co.nz on the 8th of October, New Zealand Banking Association says despite tough economic conditions, the vast majority of New Zealanders are managing their financial situation well. Despite significant increases in mortgage interest rates between 2021 and 2023, nearly 40% of New Zealand mortgage holders are still ahead on their loan repayments, according to the latest Retail Banking Insights report from the New Zealand Banking Association, the NZBA. The data covers January to June 2024, just before mortgage rates started to decrease significantly. As of June, there were 1.38 million home loans across 1.14 million customers, with the average loan valued at $318,151. For first-time buyers, the average loan was $472,361. Only 1.4% of mortgage holders were behind on payments, unchanged from the previous year. During the first half of 2024, 13,095 home loans switched from principal and interest payments to interest only, down from 16,167 in the latter half of 2023. Reserve Bank data shows that non-performing mortgages amounting to $2 billion, 0.6% of all total mortgages, have levelled off after a sharp rise last year. Interestingly, 39.7% of mortgage holders are paying more than their minimum repayments, though this figure is down from 45.8% 2 years ago. With mortgage rates falling, it suggests that the worst may be over for many. NZBA CEO Roger Beaumont acknowledged that while some people are struggling financially, the majority of New Zealanders appear to be managing well. The number of hardship applications rose slightly by 1%, to 9,267, with 5,968 approved, which is a 6.9% increase. Credit card data showed the average monthly spend was $2,072, unchanged from the previous period. Notably, 67.2% of cardholders paid off their balances in full, avoiding interest charges, up by 0.6%. Beaumont also highlighted that savers benefited from higher interest rates earlier in the year, with term deposit rates averaging 6.1%. However, term deposit rates are expected to decline along with interest rates in savings accounts following the Reserve Bank's recent OCR cuts. Topic number 4 from TradeMe on the 8th of October, spring trend or market rebound, house prices bounce back. Property prices saw a rebound in September following 5 months of decline according to TradeMe's latest property price index. The national average asking price increased by 0.6% to $823,550, marking the first monthly rise since March. Significant increases were observed in the West Coast, which was up 3.1%, Northland up by 2%, and Bay of Plenty up by 1.9%. Auckland, which had fallen below $1 million in August for the first time in 4 years, also bounced back, with the average price rising to $996,350 from $986,750. Although the 0.6% increase is modest, TradeMe Properties Customer Director Gavin Lloyd noted that it reflects renewed optimism in the housing market following a difficult winter. Lloyd also highlighted that the upcoming OCR announcement could influence whether this trend continues into the summer. 11 of the 15 regions tracked by TradeMe saw price increases, while 4 experienced declines. Nelson, Tasman led the downturn with a 2.3% drop, followed by Taranaki, which was down by 2.2%, Gisborne, which was down by 1.4%, and Southland, which was down by 1.2%. In Christchurch, prices for 1 and 2 bedroom homes hit a record high of $549,050, a 3.4% increase from last year. The average price for units also rose by 6.1% to $471,150. In contrast, Auckland's larger homes, 5 or more bedrooms, saw a 7.2% year-on-year price rise, while Wellington's prices for similar properties dropped by 17.5%. Housing supply remained strong, with a 23% year-on-year increase and a 1% rise from August. Gisborne saw a 64% increase in available properties, while Wellington and Otago had 44% and 35% more listings respectively. Though demand slightly cooled from August to September, it remained 17% higher than last year, with notable spikes in Gisborne, up by 35%, Auckland, up by 24%, and Hawke's Bay, up by 22%. I suspect that would be in no small part due to the recent extreme weather events, which caused a significant dampening on the property markets in those areas. Topic number 5 from interest.co.nz on the 10th of October. Rents are static around the country, suggesting that supply and demand are reasonably balanced. Rental growth in New Zealand has been stagnant this year, according to recent bond data from Tenancy Services. The national median rent has remained unchanged at $600 a week for 7 months from February to August. The national median rent first reached $600 in December last year, briefly rising to $608 in January before settling back at $600 in February, where it stayed. Although regional variations exist, rental properties in the main population centres stayed relatively flat in August. In Auckland, rents fluctuated between $650 and $660 since September last year, with minor exceptions in November 2023, where it was $645, and May 2024, where it spiked at $670. This suggests that Auckland's rents have been stable for almost a year, which is great news for tenants. Wellington's median rent has ranged between $600 and $623 since March, landing at $620 in August. Similarly, Canterbury's rents have stayed between $540 and $550 a week since November 2023, sitting at $540 a week for the second consecutive month in August. The ongoing stability in rent prices suggests a balanced supply and demand for rental properties nationwide, which, as I mentioned before, great news for tenants, despite the fact that a lot of landlords have had increased prices with things like rates and insurance costs increasing. Once again, a lesson that landlords have no control over market rent. Brighter days are ahead as OCR rate cuts offer relief for buyers and house prices show early signs of starting to bounce back. Learn how to take advantage of this changing market. Don't miss this chance to get expert guidance and position yourself for success. Register for one of our events called How to Succeed with Property Investing. In our free online and in-person sessions, we teach you proven strategies so you can make smart, informed decisions in today's market. Whether you're a seasoned investor or just getting started, this event is packed with practical tips to help you to achieve your financial goals. I'll also tell you more about how we could help you if you decided to become a client of ours. We could help you reach your investing goals. So if you're interested in finding out more about what we do, visit propertyapprentice.co.nz today and sign up for one of our events. If you've already been to one of our free events and you'd like to know more about how we can help you on your journey, book a no-obligation phone call or meeting with my husband Paul Roberts through the website, propertyapprentice.co.nz. Thanks for listening.